From precision parts to public markets, Ratnaveer isn't just expanding its product line, it's reshaping its identity as a global industrial leader. Ratnaveer has proposed raising rupees 211 crore via equity or other securities through qualified institutional placement, rights issue, FPO or similar modes. The company also plans to increase its authorized share capital from rupees 65 crore to rupees 85 crore. And they're amending their Memorandum of Association to include financial lending as an ancillary business. An extraordinary general meeting, or EGM, is scheduled on July 4, 2025, to obtain shareholder approval for these changes. This fundraising initiative is expected to, strengthen working capital, support research and development and automation, and expand operations, especially in stainless steel washers tubes and new verticals like circlips. So, let's take a quick look at the FY24 performance, which already reflects this strategy in action. Revenue stood at about 602.40 crore rupees, which is up by 25.2% year-on-year. EBITDA came in at 57.03 crore rupees, growing by 21.27%. Net profit reached 31.05 crore rupees, which is a solid increase of 24.11%. The EBITDA margin was around 9.5%, while the net profit margin stood at 5.21%. Sales volume grew by 24.10%, and the inventory turnover ratio was 2.27 times. Over the last 3 years, revenue has seen a compound annual growth rate of 18.28%. Ratnaveer, operates across 4 major stainless steel verticals. First, there are SS washers with more than 2,500 SKUs, which are the core volume driver. Then, there's SS finishing sheets. Next, we have SS solar mounting hooks, which are really aligned with ESG and renewable energy trends. And finally, SS tubes and pipes, which are forward integrated for better pricing. These products, honestly, find applications across a wide range of industries, including automotive, infrastructure, solar, defense, marine, and railways. The company also benefits from in-house tool and mold design, which is, a real game changer. They've got capex plans lined up to meet the fiscal year 2025 target of 730 crore rupees in revenue and 83.67 crore rupees EBITDA. There's also a strong export base, spanning 31 countries, including Germany, the UK, Spain, and the Netherlands. Export revenue actually grew by 50% year-on-year in FY22, and honestly, it remains a key driver for the business. Our aim is to be a 100% green power company with strategic expansions and a firm focus on value creation through integration and innovation. Now let's talk about risks. Steel price volatility is a big one. Global cycles can affect margins. There are execution risks too, like delays in expansion or fundraising approval. Working capital strain could come from inventory or receivables mismanagement. And of course, there's high competition, especially in commoditized segments. Plus, forex exposure is a factor, since over 20% of revenue comes from exports. Alright, so as of June 6, 2025, the price stands at rupees 156.58. The 1-month return is up by 23.5%, but if we look at the 6-month return, it's down by 32.8%. The price-to-earnings ratio is 15.86, which is actually below the industry average of 20.08. The price-to-book ratio comes in at 2.25, and the debt-to-equity ratio is 0.53. There's no dividend yield at the moment, and the market cap is rupees 833.14 crore. Lastly, the trading volume is 146,320, that is 1,46,320 compared to the 20-day average. The stock fell 9.5% on June 2nd, right after the announcement, but then it rebounded, showing, mixed short-term sentiment. Foreign institutional investors actually increased their stake from 1.19% in June 2024 to 1.84% by March 2025. And that's definitely a sign of growing institutional confidence. So let's look at both sides. The bull case, rising margins and export push being ESG ready, and of course strong leadership. On the other hand, the bear case, execution delays, market volatility and input cost pressure. Ratnaveer is not just building washers and pipes, it's building resilience, scale and a precision-driven legacy. If you found this analysis helpful, make sure to like, subscribe and hit the bell icon for more in-depth breakdowns of India's most strategic corporate moves.